I'm Rob Levin, co-founder of Work Better Now, and today I'm thrilled to be joined by Stephen King, founder and CEO of GrowthForce and the Path to Profit podcast host. Stephen, thanks so much for joining us. It's good to see you again.
Thanks for having me back. Good to see you as well.
Yeah, let's jump right in. Stephen, tell us a little bit about your background.
Okay, so I started doing accounting when I was 12. My parents were off the boat from Ireland. Firstborn male of the generation gets the family farm. And my dad had a side hustle of a little tax and accounting bookkeeping practice in the basement in our house in Queens. And my job was to go downstairs and help your father. And so I've been doing this pretty much my entire life. That's 50 years ago. And I did a stint in Ernst & Young where I learned management accounting. I learned how leaders need reports that they can make decisions from, right? Reports that are actionable. And so I realized when I was doing that for these Fortune 1000 companies that my small business clients needed even more because they had fewer resources. And so I've dedicated my life to kind of automating the back office, eliminating as much of the manual work as possible, but really focusing on delivering actionable financial intelligence and then teaching my clients how to read and interpret those results and then how to make decisions based on data.
Gotcha. So we have that big 4 or 6 or 8 background in common. It's interesting because my dad owned a business. He had a dental laboratory. And for some reason, I was always involved with, even as a kid, in meetings with his accountants. And what I always loved about accounting as a kid was I felt like the accountants had insights to all of these different businesses. And it turns out one of my dad's accountants was buying a lot of his clients' businesses, that's probably a topic for another day, which is really interesting. So thanks for that, Stephen. Tell us then, how did GrowthForce start? And then tell us a little bit about what GrowthForce does.
So when I left Ernst & Young, I did a 7-year stint at Amnesty International as a chief financial officer. And then in 1995, Netscape 1.0 came out, the first commercial browser. And this new thing they were calling the internet. And so I left and started a company called Virtual Growth and was the first cloud, before they called it the cloud, web-based accounting service. And that's kind of evolved to where GrowthForce is today, 25 years later. We are an outsourced accounting department that does everything from the basic accounting and bookkeeping up to and including the CFO services, the advisory services, teaching you how to grow. And our clients come to us because they're frustrated. They're frustrated that their financial statements aren't accurate. They can't rely on them. They worry about, are there ticking time bombs in those financials? You're making decisions on data that's not right. They're upset because they're working really hard and they're just not living that American dream to the fullest. And they worry, I have a single point of failure with one person, get to a company's 2 million in revenue to 10 million in revenue. And all of a sudden you need some heavy hitter professional staff, but we're expensive. And so it's a lot easier to get a fractional share of one who is designed to help you grow your bottom line.
Gotcha. Makes a lot of sense. And again, I guess guys like you and I take numbers for granted. Number one, we know that the numbers, and we hope the numbers, they better be, the numbers in our companies are going to be accurate. And then we just have this ability to analyze it. But as you kind of inferred, most companies they don't have either. And it's like operating in the dark, I guess.
Yeah, I mean, there's a lot of companies that come to us because they've basically outgrown their current situation. And instead of bringing on somebody for $150,000, it makes a lot more sense to get just exactly what you need when you need it. So, but kudos to your dad for introducing you to the accounting early on. I mean, that's something I don't think enough people do.
Yeah, well, I'm glad that he did because I ended up going that direction. He was in the dental laboratory business, which is not a good business to be in. So I guess I went in the right direction there. Tell us a little bit, when GrowthForce gets a new client, what are the typical things that the typical opportunities for improvement that you see right away? And I'm asking this question because my guess is that when you see this with your typical new client, that a lot of other companies are probably dealing with the same thing.
Yeah, I think the first thing is, what's the gap between where do they want to be and where are they now, right? We do a gap analysis. And what that means is you look and we start with, what are your goals? What do you want to do with the business? What's your exit strategy? There's only three things you can do. You can run it till you die, you can sell it to somebody else, or you can transition it to your managers or your family. And there's a different strategy depending on which one of those three paths. And then what are the decisions you have to make? The Ernst & Young methodology I mentioned starts with, what are the decisions? And I've been doing this for decades, right? 30, 40 years. There's 5 big decisions. Where do you spend your time? Do you have a top line problem, an above the line problem, or a below the line problem? And I can dig into that if you want. Number 2, pricing, the single most important decision you're going to make. And there's a right way and a wrong way to do pricing. Number 3 is hiring and firing, not just people, but clients and services. Not all clients are alike. Not all are a good use of your time. Increasing the productivity of your people. We do outsourced accounting for service businesses, specifically white collar service businesses, architects, engineers, consultants. And you want to make sure that you're maximizing your people, because that's 82% of your expenses on average. The whole business is about the people. So how do you maximize the return on investment? And then spending money to make money, investing in sales and marketing. So we start there and we work backwards to design the chart of accounts and the QuickBooks system and the Intact system. Those are the 2 systems we support now. And so that you can get out of the system data to help you make the decisions. So you have to start with the decisions.
Yeah, I think that what you just said is really subtle and really powerful, which is you're not going and digging in right away to clean up the books, and you're going to first start with, well, okay, Mr. Ms. Entrepreneur, what do you want to do? And that will dictate a lot of the nuances in terms of how the books are set up and all of that. I hope people appreciate that, because it's not the typical approach of somebody coming in and trying to clean things up. So somebody's now been a client for 3-6 months. You've gotten past all that. You've set things up, right? What's usually next for them? And again, I'm extrapolating this. I'm asking this question because I'm figuring we can extrapolate this to other companies that maybe they do have their books in good shape. But what is next for them at GrowthForce?
So we do, again, it's all about making data-driven decisions that increase profitability and improve cash flow, right? And reduce the worry and the frustrations and the anxieties that people have. So first, what we do is, when we know what the decisions are, then we can set up the chart of accounts and what are the above the line costs. The above the line costs are all the direct costs the customer's directly paying for. It's direct labor, your money makers, and your direct materials, the stuff you have to buy to make money. And you move those expenses into cost of goods sold, so you can see a real gross profit. That's the most important number. Gross profit as a percent. Gross profit percentage is the #1 metric of every business. And then what we start to do now is start to stack rank and start to look at who are the best, who are the worst. Compare that against what is your plan. And
You mean who are the best, who are the worst in terms of customers?
Profitability, yes.
Yeah. Yep.
Right,
Gotcha.
profitable clients. And then compare that against what was your plan. One of the keys to success is you have to get pricing right. And typically what we see with a lot of our clients, most businesses in general, is they look at an industry average for gross profit. Okay, my industry says we should make 50% gross profit. So if my costs are 100 grand, I got to sell it for 200 grand. And that's a flawed promise.
Absolutely.
It's flawed for a couple of reasons. Number one, first, it assumes that you have the full costs at your fingertips. Now, when we allocate labor costs above the line into gross profit, to cost of goods sold, you have to have fully loaded labor costs. You have to look at not just the payroll and the taxes, but the health insurance, the 401k. We look at the recruiting costs, the training costs, the entire cost of the people. And then we add that into that salary and taxes to come up with a real cost per hour. Because if you have high turnover, you're going to have higher costs than your competition. And that's why just looking at the industry average is not good enough. The second reason why looking at the industry average is not good enough is not everybody has the same overhead structures. Some people have offices, some people are remote, and not everybody has the same profit targets. For some people who make $1 million would be a yay, and others would be, wait, what? Why? What happened? And so what we suggest instead, when you want to do that, once you know your fully loaded costs above the line, now you want to set pricing based on your profit goals. You start with pricing. You start with profits first. Instead of starting with your costs, you know, I wrote an ebook on this where it says the wrong way is to go down the income statement. Start with, you know, your revenue is a multiple of cost of goods sold. No, your pricing should be how much profit do you want to make at the end of the year? Divide that by the number of available hours you have to make money. That's how much profit you need to make per billable hour or per chargeable hour. Then you look at all your overhead. How much overhead do you have for a whole year? And if you've got 3 million in overhead and round number 100,000 of available hours, meaning the hours that are utilized, the hours that are billable, you're not including travel and sick time and PTO and meetings and training and all that other stuff. Usually 25% of the hours are not billable. If you have 100,000 available billable hours or chargeable hours in a year and $3 million overhead, you got to make $30 an hour to cover your share of the overhead. And then you can add up your profit goals and your overhead goals, and that's how much gross profit you need to make in order to make your profit at the end of the year.
Gotcha. So let's just dig into pricing just a little bit more.
Yeah.
So what you just gave us a financial and goal approach to setting price. Yeah. What about how does a company incorporate both what competitors are charging as well as the value that they're delivering to the client?
Yeah. So this is you really raised a excellent point, Rob, because that math becomes your floor. Right? You can't go below that or else you will not hit your profit targets. Now, sometimes you may say there's a competitive reason to give a lower price. You do want to keep a competitor at bay, or there's a strategic reason for this client that values more than just the gross profit. Excluding that, though, what we suggest to clients is you have to figure out what's your USP, your unique selling proposition. What's different about you that would allow you to explain to a client why you're more valuable than someone else? For example, for GrowthForce, it's management accounting. Yeah, you can find a cheaper bookkeeper. In fact, we're gonna help you find a cheaper bookkeeper because that's not where we add the most value. But where we're uniquely positioned is to be able to create reports that are worth more. Now, the good news is it doesn't cost a lot more. But that little bit of extra is the difference between profit and loss. And what I say to clients all the time, if you're a well-run company is making 15 to 20% profit, right? A market leader could be 20% plus. But most of the companies that we see are coming in at 8 to 10% profit. And if you're happy with that, mazel tov. It's great. It's not broken. Don't fix it.
That's good Irish there, by the way.
I'm a New Yorker. It's a little Yiddish.
Yeah.
And but if you're trying to get that extra money on the bottom line, it has to show up in your gross profit. So either you decrease your cost of labor or your cost of materials, find more efficient ways to do the same work, automate processes to lower your costs, or you have to be able to explain your USP, your unique selling proposition, why you're different, to be able to justify. And if you're a commodity, you can't do that. But if you're a service business, it's about trust and the relationship and the emotions that someone feels. So, you know, the selling side, I'd be happy to talk about, but that the only way you're going to get to your profit numbers is if you start with profits first.
Yeah, makes sense. And I think we're touching on a really critical topic, especially this time of year, we're recording this in September, probably come out later this month or in October. And a lot of companies now starting to think about pricing for 2024 and pricing changes and stuff. I know we're going through that now. And, you know, it reminds me of it's a story. I wonder if you heard this. There's a big manufacturing facility. They pump out $1 million worth of goods a day, right? Big operation. And they have a problem. And they tried all of these people and nobody could figure it out where it is. And somebody says, hey, I have just the person. This woman figures out problems in an hour or two. And well, bring her in, right? So the woman comes around, she walks around the floor, she looks around, she takes a piece of paper, or she takes a picture of the entire map of the operations of the manufacturing floor, right? And she puts a big X, she goes, your problem is right here. And they're like, oh my goodness, you're amazing. How did you do that? She goes, oh, that's what I do. Here's my invoice, and it's $50,000. And they go, $50,000? You were here for 2 hours. How do you substantiate that price? She goes, it's very simple. If you want to look at it by the hour, well, I'm $500 an hour, you know, and it would be $1,000, but it's really another $49,000 for knowing exactly where to put that X. And I think a lot of people in service businesses, they think about hours. They don't always think about the value they provide. So after you've done all of that analysis, it's so important to think about that and then maybe how to reposition yourself so you could be providing more value. Even little things like providing a better customer experience. People will pay more for that. Do you see that a lot with your clients?
A lot. We have this hard conversation where it's like, okay, I am afraid to increase prices because I'm going to lose some customers. Well, the reality is that if you keep the wrong customers, you're going to lose your business, or maybe as an extreme, but you're not going to have that 15% profit, that American dream. So understanding unit economics really matters, right? And in the service business, what does that mean? That profit per hour, that overhead cost per hour allows you to understand what the gross profit needs to be. And it's really easy in QuickBooks because QuickBooks Pro stands for projects. And so if you think about what your unique selling proposition is, we specialize in architects and engineers and contractors and consultants, white collar service business. You can bring so much more value when you have a niche focus because you serve a lot of clients, you learn things over the decades.
Yeah. Makes a lot of sense. I'm glad we did that deeper dive into pricing. Actually, one last question on pricing. So if you were to give companies beyond, let's assume that which they probably haven't, but let's go beyond doing all of the math work that you said to really understand your unit economics. They're looking at 2024, a lot of people are saying there might be a mild recession. The economy is certainly not going to be as strong as it is this year, as far as anybody can tell. What's that one piece of advice you give people when they're thinking about how to change their pricing going into 2024?
Well, it's making data-driven decisions, right? You can choose to say, on this client, I'm going to accept a lower margin. That's okay. I'm not suggesting it's not okay, but at least you understand why your profit will be lower on that at the end of the year. Yeah. And you're making a decision to accept that because there's a bigger purpose. So that's the issue. You have to have the data. Gotcha.
Thanks for that. So let's switch gears a little bit. Other than pricing, what are some of the smartest run businesses doing today, with respect to finances and accounting, and maybe even a little strategy that the typical business is not doing?
Scenario planning. We're coming into, we may come into a recession. Depending on who you read, you'll always find something to back up whatever you believe. Right? It doesn't matter if it's politics, sports, or finance. And but this is my 8th recession, and you have to plan for the worst and pray for the best. And so we just had this conversation with a client yesterday, where there's basically the first thing you got to do is get aligned around is what do you think the future is going to look like, and how long will it last? And you want to be forecasting at the worst. We call it the baseline. This is the number that if we have to hit this in order for us to have an acceptable level of profits, or in some cases, the baseline is just not losing money. The budget is what you should be doing. And this is the only number that everybody in the company gets. And then a stretch goal is, well, if we knock it out of the park on a couple of things, we could hit this number. And the bonus plan then gets driven by the budget plus. And this is the time of year where you want to start thinking about that. You also, cash is king. You have to have a 13-week cash flow. If you ever go to bed at night and as your head hits the pillow worrying about, crap, do I have enough cash to cover payroll? If that ever enters your mind, have a 13-week scorecard, a 13-week cash flow, because it takes 13 weeks to see a problem and solve it. The next thing is the hardest part, which is, all right, what if we have to do cuts? And what we suggest is, there's two types of costs: the above the line direct cost, and the below the line, the indirect cost. The below line is all your overhead, right? It's not what the customer directly paid for. It's the rent, it's the IT, it's HR, accounting. And so if you're going to have to make cuts because your fear, especially if you look at your baseline, okay, if we don't hit this revenue targets at these costs, we're going to be in trouble. Start below the line. Look at your overhead costs. Outsourcing is a great way to save money. You can take a full-time position and turn it into a fractional position. Great. Offshoring, another great way to save money. And look at automation of everything that you can possibly do. And that's the last step, right? What we suggest is, if you have downtime because you have lost some big clients or your sales aren't coming in, whatever the impact of recession is on your business, sharpen the saw. Use, employee turnover is the single biggest hidden cost in business. There's no line item that says, here's the cost of turnover, but I see it. When we do our people scorecards, I see it. The impact on profits is unmistakable. And you see it in a people scorecard. And so if you want to do is, you don't want to lose those good people, the people you've invested in recruiting and training them. And so you focus them on automation. Power Query is, we're using a tool right now, Power Query, to help automate as much as possible. Documentation, we're using a tool called Scribe to help create procedures manuals just by employees going through their day-to-day work. Scribe will record it and turn it into a procedures manual. Use that investment of time that you're making in your valuable people to give you a return on investment, because every recession has an end. And so you want to keep the money makers and just get a return on investment while you're waiting for that lift to take off again.
Yeah, and again, like you said, it just starts with data. It's so powerful. You mentioned automation. I just spoke in the Great Game of Business last week, talking about the talent crisis, which I want to get into with you in a second. And I talked about retaining your A and B players and stuff is a way to deal with the talent crisis. But automation now can be so powerful for small businesses, and so few are tapping into it. I mean, QuickBooks, which is probably the bookkeeping system that everybody's using, has so many integrations that can make your life so much easier. And then you use tools like Zapier, where there are not built-in integrations, and you can just automate so many things, reduce errors, improve the customer experience. Yet, despite the fact that all of this stuff is really inexpensive, I can't believe how few businesses are actually taking advantage of this. Tell us about the opportunity that's there when you start to really get into automation. I mean, it's so powerful.
The AICPA has been saying for over a decade that the accounting clerk position and the bookkeeping positions will no longer exist in our lifetime. And COVID and the coronavirus accelerated all that, because people did what I just said. I think the problem is that it's, number one, when you're on the hamster wheel and you are running and following up with leads and emails and phone calls and managing people issues, it's hard to step back and say, okay, what can I do better? Plus, the other part is, it's a significant learning curve to go out and find out, do I zap integration, or do I use Power Query, or do I use one of the other half a dozen tools? And the risks of getting it wrong, well, you're stuck with it. And so that's another reason to outsource, to use other people's resources to bring their hundreds of clients of experience and the mistakes made on someone else. But I think the biggest reason why that people don't focus on this is they have, almost everybody ends up with someone in a tenured office manager, finance manager, director of accounting, who is really valued, knowledgeable, and most importantly, trusted. They've been there a long time, that you don't want to make them fear like, oh my God, I got to go look for another job, because you lose him or usually her, it's a significant loss to the company. And so what we suggest when we come into clients, we say, look, training is our highest value. We're going to train that liaison, that office manager, how to read and interpret the results so they can sit down with you and say, okay, we have a problem with Tommy's team. They got 3 accounts. They're consistently under profit. They're not hitting their goals. Now, all of a sudden, instead of entering bills or writing checks, hopefully nobody's writing checks. And hopefully nobody who has anybody who's paying bills also allows that person to reconcile the bank account, because that's how fraud happens.
Accounting 101, yeah.
Right? But you have to you have to go into this automation process saying, look, you're really valuable to me. I can't do it without you. I want your help to help use this partner that we've got to automate everything. And they're going to teach you how to be a trusted advisor to me, the owner, the CEO, the president. And that's
higher value work.
Higher value work, right? We, instead of delegate, we call it elevate, right? Move each person on your team, upskill the people on your team so they add more value, and get rid of the bookkeeping and the coding and the transaction and the data entry, because you can automate it, and it's going to go away anyway. So you might as well embrace it and be a leader.
Right. Great advice, Stephen. Switching gears one more time. As I mentioned, I was speaking about the talent crisis at the Great Game of Business. It's becoming, it was one of the top topics, actually. How are your clients dealing with the talent crisis? The fact that it's harder to attract, retain, and have a certain level of productivity. All of these things are creating the talent crisis. What are your clients saying, and how are they dealing with it?
Well, you may be surprised to hear this, but the first thing I typically say to people is you start with the data, right? You have to be able to know, okay, what is it costing us? What is the cost of turnover? And what are the risks that we've got with increasing compensation? Because that's what people go to first. So you'll see the cost of turnover will show you in your gross profit percentage, right? If you've got turnover, the new person takes 90 days to get to full productivity. You have 2 people now doing the work because you've taken your best person, your most valuable billable person, out of billable work, put them into a windowless conference room to do some training. Hopefully they're getting trained. And then that new person's just going to need help. So your margins are going to erode. Once you understand what those costs are, it's a no-brainer to invest in your people. It's a no. People join companies and they quit bosses.
Yeah, that's very, very well said. Stephen, I'm sorry.
No, go ahead.
No, please go ahead.
So what you've got to understand is, why are people leaving? Culture eats strategy for breakfast, right? Peter Norton, is that who said that?
Peter Drucker, yeah.
Peter Drucker, I knew I was wrong. Thank you, Peter Drucker. And it's so true, because if you have a culture where you attract people because of cultural fit, and they stay because of they will stay because of cultural fit. They'll also stay because, Maslow's hierarchy of needs kicks in, right? Safety and survival is down here. Well, that's salary. You have to have a competitive salary to allow people to live the lifestyle they've grown accustomed to. You have to have safety. You have to have the health insurance that allows them to not worry about, if they need to have an operation. But really what people are seeking is self-esteem and self-actualization.
Recognition, yep.
Recognition, and it's cheap. Recognition is free. Being nice is free. And so if you invest in a human capital strategy, Paul Savardi at Insperity taught me you need both a human capital management strategy and a financial management strategy working together because it's people that drive profits. And so if you start with a culture by design, if you don't have a culture by design, a culture is going to get created.
That's right.
But at least you now can recruit for people who are more likely to stay a long time because their values are attached. For us, it's family first. I started GrowthForce so I could coach my kids' baseball teams and basketball teams. And we attract people who want to use their God-given talents of accounting and accounting systems to help small businesses achieve their goals, but who recognize that I'm working to live, not working. I'm
Right.
working to live, not living to work. And so creating that culture helps you lower your turnover, and it doesn't cost a lot. But you do have to pay competitive salaries. That's a short-term reward.
Yeah, I couldn't. Well, not only could I not agree more, it sounds like it's almost like you were in attendance for the session I did at Great Game, because I covered all of these things, maybe slightly differently. Stephen, when you are not working, what do you like to do?
Well, I'm a gardener. I live in a livable forest in Kingwood, Texas, northeast Houston, and I just love getting my fingers dirty. I come from an Irish. I'm the son of a daughter of an Irish farmer. So, I just love being with my family. I'm looking forward to scheduling out the next rounds of vacations for the next 6 months, because now we're in the South in Texas and the weather gets really nice. So, but yeah, I think gardening and painting and just building things.
Fantastic. Stephen, thanks so much for spending some time with the Work Better Now community. Where can people find out more about you, about GrowthForce, about the Path to Profit podcast?
Yeah, so if you're looking for resources to help you be able to grow your bottom line, or just want to start a conversation, growthforce.com, GROWTH force.com is our website. growthforce.com/path-to-profits. Path to Profits is our podcast. There's a link on the homepage. And I just sit down with, some of the brightest minds to get their insights about what has helped them on their path to profits, and also what mistakes did they make that we can learn from. So it's really helpful.
Awesome. Thanks again for spending some time with us, Stephen.
Thanks, Robert. Appreciate you having me back.
Yep.